Alan, we have reports that Blackstone is going to spend $1.2 billion buying Shell's stake in a natural gas field in the Haynesville Shale. If those reports turn out to be accurate, is this a good deal for Shell? Does it make sense for them?
It's probably the right thing to do. They have already told investors earlier this year, they have a new chief executive, Ben Van Beurden. He's promised to divest the company of assets that aren't performing as well as he would like, as investors would like. So it's not a total surprise.
And by performance, we mean generating cash right now.
Yeah, generating enough return to be more than defensible, right? And they're not. They've taken some bets in unconventional assets in the United States and North America, and they haven't been delivered.
Right. And so Lex approves of this strategy: a slimmer Shell, and a higher return Shell.
I think so. The only question is, they did do a number of dry gas, what we call dry gas versus wet gas investments in the United States in 2010, 2011, 2012, and then it stopped.
Right.
And it just wasn't as fashionable for a number of reasons that have to do with the price of dry gas.
So in a situation like this, one where you have, I don't want to say a forced seller, but a motivated seller in Shell that's made certain commitments and has to fulfill them, and you have a very cash-rich and more patient buyer in Blackstone. I would think this would be normally a situation in which Blackstone stood to do quite well. However, a dry gas shale field seems like a strange asset for private equity.
Yeah, I guess so, a little bit. It's not as fashionable as the gas fields which produce some natural gas liquids, which are petroleum offshoots that track closely the oil price. Have been, that's been really where the investment has been going the last few years.
And because that's where the cash is coming from, with
much
natural
higher
gas
returns.
prices low.
Exactly.
Right.
And the drier gas things haven't
but
worked out so well.
Your standard private equity investment is about steady cash flow to support debt, to generate returns down the road, maybe after some restructuring. What is Blackstone thinking in this case?
I can only think that they see the Henry Hub, the standard dry gas price, going up in the United States over the next year or two. They're willing to wait. I mean, it's worth noting that inventories, though they have recovered a bit, natural gas inventories in the United States, though they have recovered from last year's really very powerful winter, which shut down production and really withdrew a lot out of inventory. They started to recover. It's been a cool summer. They're still going to be low going into the winter this year. I would guess no less than 5 to 10% below 5-year averages.
So an interesting play for Blackstone if prices bounce.
If prices bounce, and they probably will.
Thanks, Alan.